Good morning, Thursday, October 27, 2016. I'm going to run through the futures here real quick. A lot of gut this morning on how I'm going to eyeball these charts. I woke up and I'm thinking that the dollar is going to be lower, equities are going to be higher today, just due to the fact that even if some of these stocks that we've looked at, say Nike and some of the other ones that have been beaten up for a while, they all decided to bounce with the ones that go up today, decide to bounce too. So I'm leaning on the long side on equities and the short side of the dollar this morning. Just like I said, I'm just going to go through a lot of this is my gut. I'm going to use a lot today on this money flow. Okay. Basically, how I'm reading this with the money flow coming out is that there are a lot of people on the sidelines that they're going to have to jump in. Okay, so basically, like in this case, the Australian dollar, the green lines are support levels. The money flows come out. It was repelled at a higher level, so in theory, lower. It has to test the bottom here, but there's enough gap in the money flow that there could be a bounce here. We're only talking about 20 ticks or something. So to me, it's going to be a pass. Plus, it's right here at the happy level. So it can sway basically between the median line and the lower end. There's just three areas here. Okay, so I'd pass, but what I want to point out is a lot of with the money flow today. That's Australian dollar. British pound. Okay, British pound. Money is beginning to come into it. The first stopping points are these resistance levels, which also coincides with the previous high. What I'm looking for here, and I'll point out in another video about how to get into the British pound with through the equity side, FXB, Frank, X-ray, Bob. That's another way of going in there. And I would, if there's any sharp pullback, I'd like to be a buyer, just due to the fact of the recent behavior. So as of right now, the next stop-in level is about 123 and change on the British pound for right now. There's some, we're still stuck sideways, but with the hard hammer and the volume, I like the long side for now. Okay, and any pullback, for whatever reason, have to have powder on this one to buy into it again. But I do, excuse me, the more I think about it, clearing this would obviously open up back up to the upper 120s, and that's close enough to me to be the 130s. So there may be an opportunity here that this one, they're changing the margin levels. But this should be worth a pretty good move on the long side for the British pound. And since it is currencies, you can hold on to it. So as you can see here, from the low, coming back up, you're going to have to give it at least 2-3 weeks on the long side here. But we'll know more later on. Excuse me, as it approaches this upper area. But I like it. If you're in this day, then just hold on to it. Put your stop in, down in this area, and you can trail it higher. But it's one of those that if you get stopped out, you may have to come back in. So the powder is where you'd stop out is typically where you'd want to buy into. How many of us put in stops and they get hit by a tick or two and then we're gone? Okay. British pound, Canadian dollar. Canadian dollar goes higher, so should oil. The money flow has come out of it, and for me, it's good enough to play it on the long side here. We have a rollover in Brent oil and to December, and America should be rolling over here soon to the December contract. There is some discrepancy in price. I'll adjust the charts when we come to it, but I like the long side, the Canadian dollar and probably oil today. Actually, with the weaker dollar, stronger commodities across the board, I noticed that platinum is doing pretty good. It should pull up the others. Silver is lagging. Then there's gold. I mentioned before, I like the downside in gold, but it has to, in theory, we have to drop another couple hundred points. Okay. Here's the euro. I was looking for 109.50, 109.80 yesterday. We're sitting at 109.50 here in the futures. Looking for more here. We'll shoot for the upper 1.9s. That's what I was looking for on Thursday. So with a weaker dollar, and the money flows come out of it, there should be a push up higher. What's that, about 109.88? So another 30, 40 pips higher. But we may have one of these days where everything just kind of goes to an extreme. Last Thursday, we were all over the board, very frustrating for players. Today, I think we might get some one-directional bias plays. Okay. Japanese yen, here's another one. Now, as this goes down, the US yen goes higher. So if I'm looking at this, it's somewhat of a bounce for right now, even though it's at the lower range, the money flows out of it. You can have a tight enough stop. Let's take a 15-minute look here. Tight enough stop. Okay. Like right here to reverse your position. Okay. Set that up on the yen. So if the dollar comes down, I assume that the yen spread would head back towards the 104 area for right now. That's just how I'm kind of setting things up this morning. Weaker dollar, stronger currencies. Here we are with Mexican peso, basically bounced off support levels here. There'll probably be some money flow and price will move up, which means that the U.S. Mexican spread, let's see here, their pair. Let's take a look here. Last at 118.73.74 would roll over. You want to play the short side to catch the carry on the U.S. Mexican. So that's what would benefit here. I would look. This would have to break through for the trend to continue lower. I just think it's a pullback of what's already happened here. So basically about 50%. There's an area here at 53.22 and 53.35. So I drew it just a trend line, and it comes down to about 1860 on the cash spread there. Here it is again. Money flows come out on the New Zealand dollar. Very narrow range here. I'll lean towards the long side this morning here for right now until something changes. Here's the rollover that we were talking about. Oil. Okay, so down at the lower linear regression line, the money flow came out. We're getting some takers again. Probably see some follow through up to about 51.20. Here's the happy place, 51.70 for right now. And it all basically rides on the dollar here. Dollar pulls back off the highs. I expect the commodities to roll up. So this may be one of those things that you get the moves up to like resistance area here, and then everything stalls. So you're flipping a lot of things for 50 cents, 60 cents, that kind of thing, commodity wise. You probably get a little bit more out of metals. Here's oil, same thing, riding the lower regression line. December here. Should put this in. Okay, so December, you can see the money flow came out of it down here. They found some interest. We pulled back, and here we are. This is a pivot level. Gotta believe it's going to clear the 49.40 level. So we got into the 48s, but basically stopped at 49. So now the movement back up again to 49.80. So here you are flipping oil for 50 cents. That's, like I said, a lot of things you're going to be flipping for half a buck. Those other, what did we have? We had Russ and BZQ and Tex. Okay, so all of those were basically the same thing too. If the stocks are, it's one of these where, in theory, okay, The commodity part, does it continue on? Well, I'm not quite sure, right? Okay, because tomorrow's Friday, and then a lot of people lose their mind and memory over the weekend. So if you do have, 50 cents or whatever in this, in those three stocks, BZQ, TES, and Russ, I'd probably take the profit, then want to come back in here. I don't think these lows will be taken out, but it all depends upon the stock market here. If the stock market takes off running, we're currently have about 6, 5.5, 6 in the S&Ps. We're at 3140 again. So we're back to that level that may be the high for the day. But for right now, I'm leaning that we'll probably, especially like the NASDAQ, go trend higher. Maybe 4880, where are we at? It's on the screen. 4868, so about 4880 on the NASDAQ. Okay, dollar, here's the dollar right at a pivot level. Money flows up here. So I can see the dollar coming back down around 98 from 98 and a half here. So there's a lot of those that basically all we're doing is we're poking in our noses out of the range, but we're really not changing the trends. So pull back on the dollar here should help come up commodities in that. Here's the S&P. Same thing again. If it clears, here's resistance level. If it clears 40, then we're back up to that 50 to 52 area. And anything after that, then back up to the 60 area. Gold, as you'll see with platinum, the money flows out of it. You can get a run up to, I'll say the upper end at 1282 for today. From 69, so we're talking about $13. So it could have $8 to $13 move on gold on the upside, and gold currently is at, what do we have here? GE twice. Oh, that's 6E. 12. We're up $2.50 at 1269. Okay, so 69 to 82, 70, 12, about 12, $13 we'll say on the upside here. Well, there may be the follow through into Friday, but the money flow is gone here. Like I said, it's one of these where it flips, like if it gets up to this area again, thinking about doing a short on it. Let's take a look at the daily. Yeah, not much. Yeah, 13 to 1305 should be overhead resistance if it carries forward. Here's the happy place. We're actually above the happy place. We're riding the lower linear regression. There may be some more to it. Like I said, into Friday. Okay. Oops. And then this would be the hog guys. I'll pass for now on the hogs. Copper. Okay, those of you who are in copper, wrote about this over the weekend, the bounce in copper. We've gone up. There is a few more pennies higher to the happy place. Looking at a daily, to much daily. Basically, here's the meat of the other move. So we're more than halfway on a daily base back into the sideways range, but it's had a pretty good move as of late. So if you have something that's in copper, you want to start looking to, if you're at break even or whatever, put in your stops to trail out. I just think that overall, in general, the stronger dollar will cause problems with copper and that. I'm just looking at a macro cycle, how this all works, right? If we're in the tightening phase, it helps with the dollar. Things are just slow to go because that's what it was like after the Depression too. Spent a long period of time with low interest rates. Just kind of like the Japanese thing. We have baby boomers coming out of the marketplace and new folks to go in, but they don't want to replace them because of automation, no demand, blah, blah, blah. So things are kind of prolonged. But copper, bang, we're up into this area. Basically, the move out for copper is if you're in some sort of copper-related items, I'd take it and move to find something else. I don't think that this is going to take a little weekly. A lot of sideways here. Upper range should be like 230, 240, but that'd be a heck of a move in copper. But like we saw in natural gas and stuff, there are going to be a lot of havoc there for traders. All right, money flow here into the cattle market. If I'm a producer, I'd probably want to start hedging for right now in the cattle market. Cattle's been beaten up, so I expect any pullback would probably be more of a sideways move. We're coming off the bottom here. What's that? 114. So the happy place here is 114, and we're at 104, so 10 cents higher off of a weekly basis. Daily. Swing to 1010. One of those things where if you're a producer, you'd probably want to start hedging here. This is basically coming off of a hard oversold condition, as you can see. This is just a daily. It lost from 142 to 100. That's a pretty hefty drop there. There's nothing like losing half, and as you're fattening the things, right? You gotta, oh boy, I'm gonna, get in the cattle business here. I get my feeders, and it's time to feed them, and oh, this is not working out. 40 cents is a lot. Okay, natural gas. We had pretty well fat bars yesterday. I'm sure the kids are going to be just screaming that they picked the bottom. My only concern is, let's see here. We'll move to December. Okay, so here's our fat reversal yesterday. The whole deal here is, what are the odds? Well, it's easy enough of 50-50 of these lows taken out. I got to lean towards that. We'll probably get the lows taken out by the end of the heating season. I plugged in a bunch of these to take a look at the money flow. Just hard sell-off in all the money flows. This is December. What do we have? January is F7. I see a lot of hard sell-offs. And I was thinking last night that this is probably going to be the only opportunity for me to scoop up distant contracts, but they're just a little too far out to have any type of noticeable volume. So the best I could do is get into spreading, basically buy the back month and sell the front month after a rally here. Let's see, FG, this would be February. You can just see how the hard money flow came out, came to the median line. Here's a lower regression, hard selling, reversal, bottom fishers, but at most here, what is this here? This is February, 335. Let's see, that's February. So that would probably be the last of the hard winter, February, March. Same thing, you can see the money. The momentum selling is pretty much done. Think of this as like 2008. And you bounce, and then you have your 2009. That's where I'd be interested in because of equity as comparing equities. 2008 is your momentum. You get your bounce, and then in reality, 2009 you make new lows, unless. So I would have to say that these will be taken out before or after the heating season. So they're gonna chase after it, and they're gonna hope that they're getting a pretty good deal going into winter, but winter still has to develop. And if it doesn't, I would be a huge buyer of natural gas if it comes through the lows here. But of course I want to give it some time. Okay, and that's March, and then April is J. Same thing. It's just you can see the fatness of it. So, we're going to get a bounce. Work off your happy places here. This is let's see, what I have going on here is parabolic SAR crossover. Those are the dots that I use. The triangles are pivots. Okay, money flow, SAR. The lines, they're wavy because of the volume, widens them. Those are linear regression. The fuzzy stuff over here, that's your monkey bars and pivot points. One's a weekly and the other's a daily, and then open interest when I put on daily charts. But that's what I have. So these are called monkey bars. This is like your market profile. So tighten up though, no, because I don't have as much data on there. Daily. Yeah, okay, so they call these monkey bars too. Okay, so you can see that here was basically the happy point. We tagged below it, okay. So it looks like we're gonna open up right at the median. So we may have one of those where we open up and sell off. Okay, this one's, okay, so for December, about 320 is on the upper end. Let's see, what's that one? 317.7 sounds like a winner. Okay. So yeah, I'd be interested in buying back down here. 289 or that. This is for December. It's probably not going to happen. But yeah, any new swing low, then I'd be interested in looking at natural gas again. My plan is it'll be kind of a deep pocket deal. This is because if you start writing options again going forward, okay, to pick up premium, okay, pick up 1,000 to 3,000 on a contract. Say you buy one contract, we'll go out to say like April here. We'll just do April for fun and games. All right, so here we are at, we'll say it goes underneath. We'll say you write a 290. Okay, well, actually it'd be 280 at the money. And you pick up, we'll say 1 to 3 cents, okay? If you put in the full value, it's $28,000, right? If you can only go to zero, it's 28,000. And you pick up 1 to 3. Well, you're talking to 3 to 10% a month. So $1 to $3,000, and all you're doing is you're writing. You'd be more than happy to be able to buy April at 280. But what I was pointing out that it would be in 3. So here's at 260, and then I looked at further contracts out. We're back down to the lows again. So it's one of these here that you can get 3 of them down to. I looked down to like the 220, 240 level. But if you bought one at 280 and then you wrote options down again to 260, that would be $2,000. That'd be 20 cents you're off. And then down to 240 again, you'd be 20 cents off on the second one and 40 cents off on the first. That's 6,000. So, but that's where selling the options, you make it up, okay, on the next one. You can also, if you get in here, say it closes at 279. What you can do is then turn around. If it bounces the following day or whatever, a few pennies goes in the money, you can sell a deeper in the money call too. Sell like a 260 if there's if the option selling at 24 cents, okay, or 23 cents, 20 cents out of the money, so you pick up all the loss on here too. Okay, if you have any questions, email me. Okay, it's one of these things. That's the first thing that came to me was, well, this is a pretty good hard sell-off. How would it benefit me on the distant contracts? I was like, well, more than likely we'll take out the low. So it's kind of like patience. That I may have a smart plan, but it's best just to wait until next year. Think about this one. If they're betting on hope right now, I do have to watch this though, because this is basically the first hard pullback since then. I remember silver, I think, going to $8 and back down to $5, and then it went up to 50. So that's the what I have going on here too. So I have to, I'm bullish going forward. So we're marching towards, in my eyes, we'll clear the 340 level and work our way up to 450, and then 6 cents, and then 8 cents, and then it should be pretty maniac by then. Okay. So natural gas, I'll do a separate thing on that later on. NASDAQ, okay, boom, here we are. So it looks like, are we at the 80? We're almost at the 80, okay. All right, so we're almost at the 80. So once again, we're going to be opening at the highs. Here's 88, and this is your upper. So we're now working for 20 points higher at 4,900. Like I said, it may be one of these things where we either open at the high and pull back, but I gotta believe that there could be some momentum with the stocks that have been beat up that can help carry this forward. But money flow is kind of on the frothy side. So if we come up today and fail here, by then the money flow should be pretty well. You know, they get. I woke up and felt giddy. That's just me, you know, we'll just say it's in the air, at the moon, you know. My biorhythm. I mean, I had some weird conversations with people last night, but so I did the biorhythm thing, and all my stuff, emotional stuff, peaks over the next couple of days. Do I believe it? If, you know, the moon, all I have to, I just have to keep it in the back of my head, you know. Because if the herd follows it, then I have to follow it too. If it's the whole cycle thing, you know, I try and roll with my gut when I look at these things. And this morning I kind of had to stand up and say, look, I'm just going to shoot from the hip per se and tell you what I think. And then the worst part about my thing that I have is I have to console when somebody makes a mistake and they hold on to their mistake for too long. And then I have to kind of, not really fudge, but try to smooth over the situation. Not as much as giving them hope, but I have to kind of point out that, you know, you're out 30 cents, you know, can it go up, you know, if you reverse your position, can you get your 30 cents back and scratch, you know, does it now go opposite? You know, it's that kind of thing. It's easier just to find something like that Japanese yen where the range is narrow and place your stops down there. You can reverse it too. You know, the yen's going to break out one way or the other. I like you know, the short side of the U.S. yen, but I'm looking for places to buy. Okay, so you know, it's a lot easier to deal with stuff to get out of it. Reversing is a pretty good strategy too. All you have to do is get comfortable with it. You know, you buy in, your stop is now minus. You know, you buy one, your stop is -2. So when you get short, when you get stopped out, you actually get short. Can it get whippy? It can get whipsawed, sure. But if it goes, you know, if it takes off running, you got to run. Before you know it, you're already back in the money. You got the short, and all of a sudden you're cheering on for the short side. Oh yeah. Anybody with the equities here, you know, this is the second time that I've kind of liked the long side of equity since 2 weeks ago Thursday when I said they're going to march this thing up to 2180. Okay, and then we dropped down to 20. We couldn't get over 40. You know, so it's one of these where you know, you have multiple brokers and multiple accounts. Just, you know, so some you have core holdings in. And some you can, you know, flip around. Today's going to be I'm going to say a flipping day. Okay, here's platinum. So platinum's at the upper end of this median line, but it can push it. Okay, money flows down there. I'm going to guess you can get the funds to come into this because platinum's a thin one, so they could run this thing. Excuse me, back up to 1,000, which is $30. They'll take it, which is half back on here. So platinum may pull gold, may pull silver. Where we're at. This is sugar. Money flows come out. We're at the lower range. I believe I wrote about selling calls up in here. This would be one of those that watch for a reversal here. Because it hasn't, sugar hasn't gone vertical yet. Okay, but the money flow pretty much tells me that if there's any that this support could hold, and then we move back up. Here's silver. Silver's lagging a little bit. We're only about 4 cents. But if silver goes to the upper median line, we're at 1809. So we're talking, what, 40 cents? So silver could have 40 cents to the upside here. It's trading above its little happy place down here. But I'd be very careful about holding on. You know what I said, by Friday, you know, it's one of these things that get about halfway back, whatever happens changes, whatever, and all of a sudden there's sharp reversals because, you know, silver's coming off of you know, this is basically where we at. Okay, here's December, January, and I said get long the metals and commodities. We banged up on the first one. We banged up on the second one. They're getting definitely pretty giddy here on the daily basis about buying down here. You know, the 18. Now there's a dead man's land until they get back up into here. But to me, I'd just basically, if I had played the metals long, I'd play them long for a couple of days and then reevaluate. Because if you look at this, you know, at best, I just think it's sideways because we'd have to have the dollar come back or people go in and start cornering the markets again. Bonds, okay, here we are down at the lower end. If bonds crack today, even though equities are going, yeah, and debt's going down, we're talking interest rate pressure here. So like I said, you have to be very nimble on a day like, if you feel giddy, you know, if you, you know, I listen to my body, you know, if it's a difficult trade to put on, it's usually a good one. If it's an easy trade to put on, then I'm a little bit early. But if we're all like, yeah, we finally got out of this today, you know, the charts look good, and you have interest rates, what we're known by raising interest rates is we're trying to jam the economy into recession, right? So, you know, if you're getting bullish on equities now, you're just a few years late. We're at the tail end of the game here. For this round, there should be some sort of hard correction of some sort, and then one more screaming leg higher. When it's obvious, banking, insurance, housing, autos, blah, blah, blah. VIX, I would watch the VIXs on here. I'd assume that we're going to come back through, get into the 14s again. So I'd watch the VIX today. It'd be one of those things where if we have a strong, sharp day today, up, okay, I'd be interested in, say, buying VIX puts. Or excuse me, like the VXX or it's for 1 day. 1 day's worth of insurance. It's the spec deal. You know, if the market's screaming, who's going to want to buy VIX? I'd assume the call premiums are going to be cheap. That's how I look. You know, say the calls are at 8 cents or whatever. Okay, I was talking about VXX. Let's take a look at that real quick here. All right, so we'll say 30 calls. You know, if we have a hard sell-off today, something around, you know, 29, 30, you know, that kind of thing. For whatever reason, right? I mean, it's only a 1 day deal. Look, if you guys want to buy calls or puts in the options thing, you're going to have a lot of zeros, pretty much, right? Because that's the nature of it. It's like life insurance. How often do you cash in? Car insurance. I haven't filled out an accident report since Reagan was in office. So I have a lot of zeros in the insurance business. So you can understand how I like writing these things, right? But if you're always crashing your car and always dying, always collecting on insurance, then, you know, I can see how you'd run the options. But for me, it's the other way around. But this is how I think if we do have a strong up day in equities and VXX goes below here. Where's my... goes below, I'd be interested in buying cheap calls. We're talking, you know, 6-8 cents. You know, it costs, you know, 2 or 3 cents each, so that's 8 or 10 cents. And then, you know, if you get 12, what is it? You know, you should be happy. If you buy them at 10 and sell them at 12, it's 20%. You should be happy. That's the nature of the options thing. But, you know, like I said, if anything should happen, whatever. You know, you have your exuberant speech again or something. The following day, everything was rosy into the exuberant speech, and all of a sudden, kerbango. So, and you could get anything, unwinding, blow-ups, and hedge funds. We saw the Deutsche Bank and everything, rosy numbers today, but the stock's not up that much. It's up 30% off the lows, but not much today. So that's just how I look at things. It's like, okay, what's out, you know, it's basically your coin flip, right? You take the $100, you shove it in the slot machine, you know. But this is how I'd look at it, is if we have a strong update in equities and VXX goes below here, I'd look for cheap 1-day calls kind of thing. If they're out there, I think they have always weekly. All right, what do I have here? What was triggered? Japanese yen last bid at or on. Okay, here's the Dow. This is probably going to be the one masking all the fun today. 18.3, we're at the upper range here. So we're up 44. So we could possibly have an up 200 day today, right? What's 44? 3. So what's that, 170? I got to believe if this clears, then we're on our way to the 18.3, and then reevaluate. We're above the happy place. We're pressed against and moving through the middle of the range. There's no money flow in here, so you could have a huge chase after it. So I'd have to say, what's this? What's that, 102.70? So it's 100 points from here. So 150 to 170 update today is how I'm looking at it. And bonds, same thing. Just be careful. They're rolling over higher rate. You know, someone has to crunch the numbers. This looks like a head and shoulders. This is corn, head and shoulders. Talked about this yesterday. Money flow. Weaker dollar may give some strength to it, but like I said, I kind of like the short sides of all of this. They're moving typically in harvest. You know, you get the pullbacks, you get the opposite thing. So it could be, you know, one of those where this is it for a while and then slides. You know, it's low next summer instead of high, kind of like natural gas. Why is natural gas so low? It's the heating season. Well, that's markets for you. 5 years, kind of a pause here. All right, that's kind of interesting. The front end's pausing. Here's bean oil. We did have the this is the bear flag, the reversal again. See if we get some follow through. Here's soybean meal. That's an outside bar here. When I started, it was up here. And bean's going to be ZN. ZN pause too. So front to 10-year kind of pause. Here's beans, full reversal here. Back through. We're looking at 15. Okay. Safe powder. If it gets, basically, we're talking about 30s area. So between 30s and 40s is a short. So set an alarm. If it comes blasting back through, and I think this is where we were talking yesterday about the first pause, and if it doesn't, if they can't contain it, it'll go to the next one. It came up a little bit short, 6 cents, but this is a pretty good reversal bar here. And you're getting frothy. We might get some sideways action here on beans, but I like the short side up to, I think, 1040. Yeah, I think that was it. Here's 1050. We'll use 1050 as a round number. But if you're a producer, I'd look to do some shorting to lock in prices. Okay, here's 4-hour linear regressions and stuff. Okay, ZT and ZW. Reversal about 50%. I gotta believe we're gonna come through here, back below 4 on wheat. All right, so that's that. I'll let you go. Let me take a look at the yen beeped on me here. Okay, so we came back through. We came up. The yen goes higher, then the U.S. yen goes lower, and the last on that was 104.72. So if this continues, a short side. So back below, probably 103.80 back in this area here. All right, let you go. Take care. Have a wonderful Thursday.